You know, if you lose a trade in space, it doesn't count because nobody can hear your screams.
Good thing I don't lose.
Frank. We're not lost, are we?
According to the spinning thing in front of me, I have no idea.
What was that?
Sorry, I just got an EDGEFINDER alert on my Discord.
Wow, nice add-on.
I think my helmet's too tight, or maybe my head is just too big.
Oh, it looks like we've got an incoming transmission.
Remember guys, we're doing our big Black Friday sale this month. Check out the links in our bio for more information.
Roger that, Julie.
Okay, I'm starting to think we might be lost.
Maybe James could help us with directions.
I think he accidentally blasted himself out of the airlock.
Again?
Let's go get him. Man, I've been playing too much Starfield. This feels kind of real.
Maybe we should do one more lap.
I think that's a good idea.
You know, if you lose a trade in space, it doesn't count because nobody can hear your screams.
Good thing I don't lose.
Frank.
I really don't understand why we're looking for this planet.
Frank, it's because someone told us that there's this planet out there where traders can get funded up to $200,000 in simulated trading accounts. And if you pass, you get the chance to get all your money back. It's really kind of a trader's paradise.
Traders have been searching the stars for a place like this, and it's just too good to be true.
Frank, you just gotta believe. Once you get there, they'll give you 15% off any examination with promo code A1Trading15.
Yeah, I'll believe it when I see it.
All right, Frank, take us out of hyperspace.
Coming out of hyperspace. Now. That's FX2.
That's it. That's FX2. The legends are true. It is as good as they say.
Wow, this is incredible. There's a big giant sign that's got a promo code at the front that says A1 Trading 15 for 15% off.
We finally made it to FX2. Get your discounted access to their trading accounts right now. Link and promo code down below in the description and in the chat right now.
Can you repeat all of that once again?
No.
Everybody, and welcome back to another live stream. Today we started later than our usual time, but you guys know why. It's because it's FOMC meeting minutes later on. We got some market volatility that is likely to come out of this. And of course, we wanted to be here to cover it with you guys as always. As we're kicking off the stream, there's about 200 of you guys already. If you guys would do me a quick favor, help out the stream and give us a thumbs up button down below. It would mean a lot to us as we kick it off here. We've got a loaded stream for you guys. We've got people coming on. We've got guests coming on. We've got, of course, the meeting minutes themselves, which could be potentially market moving. And we're going to run the show from now all the way up to that meeting minutes to give you guys some coverage and some ideas. Now, as we start, if you guys would do me a solid favor and hit that thumbs up button, but also let me know in the comment section or in the chat here, which charts do you guys want me to cover? I am going to start where I traditionally do, which is, of course, covering the US dollar. But please let me know what charts you would like me to take a look at as we prep for FOMC coming in pretty soon. So the first thing I'm going to start with, as I mentioned, is the US dollar. And I want to start by taking a look at the daily chart and kind of just weighing in as to where we are in the trend here. I mentioned this yesterday, but I want to kind of re-invite this conversation for a second. Thank you, by the way, guys, for all the requests. People saying NASDAQ, dollar, oil, dollar CAD, dollar yen, gold, Dow, a lot of US 30 requests and gold requests, S&P 500, of course. You guys know I got to talk about that. Let's cover this, guys. Okay, so dollar index still trading lower here. And this is what we discussed yesterday. Remember, if you're trying to fish for a bottom here on the dollar index, I warned, and of course, I don't know with certainty what's going to happen in price, but I did warn this yesterday. I said, be careful not to try and chase the bottom, because this thing could just hug the bottom of this channel for some time. Just because you have price moving in a channel does not mean that it has to ping pong perfectly across that channel, right? What we're seeing right now is a very good illustration to that. We see price hugging the bottom of this price action channel. So this is why, again, if you watched yesterday's videos and stream, I pointed out that trying to find the low here on the dollar index was a really risky game to play. And it's probably apparent if you ask somebody who's trading the dollar yen. I mean, look at this thing, guys. We completely lost out all of that momentum to the upside. And you can see the pivotal daily chart here, where you had this supportive level completely fall apart, and now markets are trending lower. In my opinion, this is a market I want to be more on the sell side than on the long side, because at this level, again, we lost what was so strong. The bulls were so clearly in control, and I like to trade markets where that is the case. I don't like to trade markets in which case sellers are able to break levels like this, okay? We broke all sorts of levels with this price action. We broke support horizontally, and we broke support diagonally with that upward trend that we saw. So if you're watching dollar yen, this looks bearish to me. In fact, it looks so bearish that even if price does retrace, I think the path of least resistance for this is that safety zone for the bulls previously, 149.26. I think that level is more sell heavy than anything now. Again, we take a look at the 4-hour chart. We can drop this down even further and see, again, you look left, key level of what was support that could turn resistance. Get your fibs from swing high to swing low. And a rally back up into the 38.2%, in my opinion, is more bearish than anything else. So for those of you guys who are watching dollar yen or yen crosses in general, actually, I don't know, yen pairs are moving a little bit idiosyncratic, if you want to use a fun jargon word in the industry. Because if we take a look at, dollar yen, it's moving a little bit differently than perhaps something like pound yen, euro yen. So, well, I guess they're all moving lower here, but dollar yen definitely taking the prize, the biggest loser prize, if you will, with this massive sell-off. Dollar yen dropping at this point, like almost 500 pips. That is a crazy, crazy move on dollar yen. So you guys have lots of requests in the chat. I appreciate all of those requests, and we're going to take a look at all of them. We're going to look at least as many as we can as we get closer to the FOMC meeting minutes, which, like I said, it will be coming in about an hour and 45 minutes or so. We'll be getting real close to it. And with that said, I just want to let you know we will be streaming all the way through. We got a show prepped here with several guests who will be joining to help prep for the news. Now, we got to talk gold, guys. In fact, let's start fresh on gold. Let's get a blank canvas and let's discuss this recent price action, okay? Take a look at the daily chart and we can really map out what's been going on with gold's price. It's actually pretty wild. So take a look at this. Gold really proving itself today. Because if you look left, you had support here, and we could actually mark this as support. And notably, you also had support right there, right? That should tell you the story by itself in terms of price action. Price rallied real strong. Price pulled back into that supportive area. And now is pushing back up to where? To the previous high, right? That's the path of least resistance. When you get huge support holding, there's a solid chance that the next wave is going to be retesting those previous structures of resistance. Now, notably, you saw kind of this head and shoulders forming early. And actually, I have to give credit to Frank, who pointed this out to me very well. He pointed out that you kind of had this head and shoulders formation printing. When I asked him if I should, well, I didn't ask him if I should get long, but I asked his opinion about it. I said, is this the long point? And Frank was like, no, because you do kind of have this lower high and a broken neckline, right? And that turned out to be the right call, because for the next couple days, the gold price went much lower. So this is a daily chart. So we're talking big picture here. Now, if we drop down to the 4 hour and you take a closer look at price action, it actually makes a lot of sense as to what is going on. So you can see price found support, a little bit of an inverted head and shoulders, found support and rallied yet again from this point here around 1970. So how do we play this? How does this impact us if you're a gold trader or somebody who is at least watching the dollar, for example? Even if you don't trade gold, it's still useful to trade or to keep an eye on the gold market. Well, I think if you're a gold bull, we are sitting, guys, at 2,000 right now. As we speak, the price of gold is trading at 2,000.77 an ounce, okay? If you get a break above this level, what I think that does is it relights the fire for the bulls, okay? So keep a close eye on this. As we see that dollar continue to stay weak, this is a very distinct possibility that we see a price breakout. And if that price breaks out, I think what happens, as I've mentioned here already, is I think that triggers more buying pressure. Now you might be saying, Nick, that seems weird. Why would buying accelerate at this level? Well, call it whatever you want. Some people will say, oh, that's liquidity getting grabbed and all the people's stop losses getting run. I think it's just proving itself, right? Keep it really simple. You don't have to get all the fancy stop loss hunting. Nah, none of that. Keep it really simple. If price breaks out from where it previously failed, that's a bullish signal. Why? Because it's doing something that it wasn't able to previously do. It's showing that buyers are strong enough to capture the zone of resistance. That's the way I like to think about it. When you can break above and close above a key level of resistance, buyers have captured that area of price, right? They've captured that resistance point, let alone all the stop loss, liquidity, hunting. No, doesn't matter. Who cares, right? What matters is price being able to capture that area. And if that does happen, then you potentially have this scenario where bulls are in control, and any retaliation or return to that price could be a nice propelling zone that you could get whatever. You can get all fancy names with it, right? A nice level of support. A broken level of resistance can become a nice level of support. It also is nicely, we can go take a look at the EDGEFINDER alongside this. I think gold, I'm not sure actually if it's getting a bullish reading or not. We'll let the EDGEFINDER load. But again, that is a very distinct possibility. We have meeting minutes coming later on. Are we going to get the catalyst here today, guys, to get us above this level? I mean, again, you need to see, I think if you get a break into like the 2015s, gold is going higher. Again, counterintuitive. You might say, well, if it already goes up, then it's already up. No. If it goes up and it beats the crap out of the bears at these levels, it is likely to attract more buying pressure as sellers run for the hills, right? And gold is getting a +4 reading on the EDGEFINDER. It's got a nice light blue tint to it, by the way. Check it out, friends of the EDGEFINDER. If you're an EDGEFINDER user, we had a wonderful idea from our very own James, who you guys know and love on the streams. James had a great idea. He pointed out that, maybe we should add 4s to the tint list here. If you're going to the top setups algorithm page, we can now see 4s on the watch list. I think it's really cool. So anyways, gold is getting a +4. It's getting a slight bullish, almost just underneath a bullish reading on gold. I think if you get a breakout, the EDGEFINDER confirmation here looks even better, and you very well could see some beautiful runs on gold. So I'm watching very, very close on gold, okay? Yeah. So my thought process is gold along right now. No, I'm saying you have to listen to what I'm saying. What I'm saying is if gold is able to clear the highs here, I will be very interested in pullback plays for the continuation move. And again, that's based off of our daily chart perspective. And remember, we've talked about it. It's in the back of our minds, in the back of our analysis for a while now. The all-time high is starting to look a little bit more approachable now that the Fed seems to be done and that dollar seems to be weak, right? If that dollar stays weak and gold gets above this level, you very well could see a quick move up to that all-time high of 2060. Now that level has been a stubborn level of resistance longer term, but we'll get there when we get there. I think that watch for the breakout first, and that could be a very interesting tell. That would be my opinion on gold, guys. Again, the Edge Finder's got a nice +4 on this one. If we take a look at smart money, here's where you get a little bit of struggle for me. The reason I'm not just outright buying gold right now is institutional money, not super convincing. So if you don't have this data, let me just show you this real quick. This is the COT report. And we have a system here that pulls in the data and makes it really quick and easy to read. So this will show us smart monies, hedge funds, big money, banks, things like that, large speculators in the market. This page will show us their latest moves in or out of a particular asset. So when we're here talking about gold, which has had a nice little rally, one thing that concerns me and why I'm not just buying gold and why I have not been long gold already, take a look, guys. Institutional money in the latest filing made a bearish play. Okay, so that's a little bit contradictory to what we just got done talking about, the bull case for gold, right? And yet here's institutional money getting short. Now, is this getting short just a one-off or is it a trend? Well, let's go take a look at the week-to-week data. This is why we've built this page. Software takes you to new highs. I'm telling you, trading with software is a different ballgame than just trading charts. So here's the thing. Yes, there has been a little bit of a slight uptick in bearishness on gold, but peel back the onion for a second. It's been accumulating bullishness from institutional money recently. And so I think that that is okay. So what I mean by that is look at institutional money. You can see on any of your favorite currency pairs, assets, whatever, you can always just head over to the latest smart money trades, the buys and sells category, and you can get a reading here to each asset. So gold in the latest filing, this is a weekly filing, guys, that we have data pulled into, right? We have a weekly filing here, and it shows that there in the last filing, it was kind of bearish. So this come around, if we get a confirmation signal that institutional money went long, that's where it's going to really matter. Okay, so again, we'll watch for that latest COT filing that comes out Friday, and the data will be automatically uploaded here for people who are EdgeFinder users. And hey, heads up, we are doing our Black Friday sale right now. If you guys don't already have a copy of this, it is the best time of the entire year to get access. We're doing 40% off of the tool right now. But if you're watching with us here live right now, click this link and you can get 45%. We're doing a special discount. By the way, check out the new headshot there. My wife was in the office and she took my picture today for a new profile picture. I was feeling kind of proud of it, so I'm not going to lie. I'm happy to. It was replacing my previous one where I felt like my hair was going wild. But anyways, so here's the way to get it, guys. Click the link. It's in the chat right now. It's also in the description. If you message while we are here live, our Black Friday sale is now live. You can get access to the Edge Finder for 45% off if you direct message us while we are here live right now. So click this link and then click this. Click Black Friday, 45% off the Edge Finder and VIP, and you can get access either one for the biggest and best discount price of the entire year. If you've been somebody watching the streams for a while and you've been thinking about getting your hands on this, this is the best time of the year to do it. So do not miss out on that opportunity. Take advantage. We go from there. Also, while we're on the topic, you can always go to a1trading.com if you'd like to get a trial. Now, I will say you might miss the sale if you do a trial because we are very swamped on people trying to get trials. But if you'd like to apply for a trial, head over to a1trading.com and click EDGEFINDER trial in the top right, and you can sign up for one. And again, it's not immediate. It might take a few days to get one. And to be completely honest, you might miss the sale. But at least if you are interested in trial, you can also sign up on the website. If you want to ask questions, if you want to get more information about the software, the COT data that we've got pulled in here, it comes with our top setups algorithm, the scanners for each asset, currency pair, gold, indices, etc., our seasonal data, retail sentiment. It is the best tool on the market, as far as I know, in terms of finding data for people who trade forex, futures, and of course, gold traders who trade on FX or futures brokers. With that said, like I said, link is in the chat right now. We'll drop that one more time. If you'd like to get that discount, it is 45% off. That is the biggest of the year. Take advantage, message us while we're live here. Okay, moving on. So again, that's one of the reasons I'm being hesitant on gold. If we get a COT report though, that's like positive, you will probably see me go long gold. That's the last. So again, we go back to the scoring, right? If you go back to the scoring and you see a +4, right? What is holding gold from being a strong, very bullish reading? It's the COT bias. The COT column is holding our score back. That's why it's only a +4. If in the next round of COT data, we get something that's a little bullish, whoo, man, I'm going to be long gold. I'm going to be looking for the opportunity to get long gold if that occurs. Now, if that's coupled with a breakout here, even better. Right? I'm looking for that opportunity to be bullish. Now, this is not me saying I am bullish. Listen to what I'm saying. People sometimes will misunderstand what I'm saying. I'm not saying buy right now. I'm not saying I'm in a long trade. I'm not. I'm saying if these conditions just change slightly, there's going to be an opportunity, in my opinion, to pick up gold and ride it higher. So we'll watch for that. And any updates that I make, of course, we'll share them inside of the Discord as well. So again, that is what we are watching for with gold. I'll give you guys a quick update on the S&P trade. I'm still in it, but we're taking on some water here today. Price is coming down a little bit on the S&P and NASDAQ. I'm still up overall very well. And my goal is to stop out if price does break what I consider support here on the S&P 500. We've crested the 4,500 level. So this is SPY. So it is about 1/10 of the ticker price or trading price that SPX 500 is. You can take a look when we pull up SPX 500. There it is, 45.34. If we break back under the 4,500 level, that is going to be my trigger to go ahead and get out of the trade. So again, I'm trading the ETF variation due to my US jurisdiction, my regulations here in the US. I can't trade CFDs. I trade ETFs, or I could trade it on a futures market, but I just prefer ETFs. I find them to be a little easier. Anyways, yeah, I'm still long. Stops in place. If price does not hold this area of support, that's going to be the end of my trade. I'm currently floating just under 18K on this trade, and if I go over VOO, S&P 500, just another ETF, I'm up 7 on this one as well. So we're letting this trade run. It's been a monster mover here for the account overall this month, and to be very transparent, as I've tried to remain, I mentioned that in context. I had 3 months of overall drawdown on my account. So this has paid back and more, all of those drawdowns. But again, it was a tough couple months. So it's nice to finally catch the really good runner that I've been looking for. Let's take a quick look now at some currency pairs here. Here's euro dollar trading higher and still looking solid. Yes, you're taking on a little bit of water alongside the S&P today. But again, I think you've got a nice upward trend and a nice change of momentum in this market. What was a very strong, persistent downtrend with concerns about inflation rising seems to have flipped on its head as inflation concerns have drastically subsided. You now have a market that's potentially pricing in even a soft landing, and that soft landing could mean a softer dollar. That softer dollar gives room for euro dollar, pound dollar, Aussie dollar. It gives room to these other currencies a chance to move. And we're now seeing that. So price action looks real solid on things like Euro USD. Again, if you've caught this rally, then congratulations. I know several traders in the group who are trading euro dollar long, which is awesome. And I think, let's see, is euro on here? Not quite getting a bullish reading. But of course, by the way, you guys can also now see if you're an EDGEFINDER user, we've added all of the, by default, all of the assets are on this, the algorithm scoring table. So you can also filter just by clicking the score. It's a cute little trick there. You can click the score button. It'll pop everything up. US oil, CAD Swiss, and dollars are kind of giving you your softer bearish readings to your stronger bearish readings. So if I take a quick look at oil, again, I think that this one possibly looking primed for some sell side, in my personal opinion. As you ready up at this level of resistance here, take a look left. You can see, again, big breakout to the downside, retested this area, and now trailed its way back up. I think that as markets continue to see economies around the world, not necessarily crashing or anything, but normalizing, slowing down from where they have been, I think that the demand of oil has been put under pressure. You've also got non-OPEC countries producing more oil than ever. I think it's like record highs, and that in some ways really contributes to the supply of oil. More supply, that of course impedes upon the demand side of things, which leads to, in my opinion, further oil decline. So we'll see if I'm right about that. I could be totally off. And I've already taken a loss on this trade once. I tried to short it around here. I ended up stopping out for a small loss. And I'm now watching for a possible re-entry. And if I do make that decision to short it again, I will share that inside of our group. So just a heads up here. Let me see if I can pull this up here for you guys. So in terms of any trades that I take on oil, you'll see it in the commodities trades signals channel. Like I said, I'm stopped out on oil from my recent position, but I've still got pound. Actually, I need to check pound CAD. Am I still in my pound CAD signal? Let's see how we're doing on pound CAD. Yes, sir. Yes, sir. We are still in pound CAD. I don't have a take profit on this. I've just trailed my stop loss. And again, this was a trade that was shared inside of our Discord group. Check it out here. Pound CAD trade update. We've trailed stops further into profits on this one. It's been a good runner for us. Pound CAD signal was sent a couple days back, and we're still in the trade going into FOMC meeting minutes. Now, again, stops are trailed here. I'd like to see if we can put in a higher low here. I'd like to get another opportunity to trail that stop further, lock in more profit. But between this one and S&P trade, which of course was also a signal shared in the group, we've had a pretty remarkable November. We also traded Aussie yen. I don't know if I still have my markup on this chart, but we traded Aussie yen. Yeah, so we trailed out of profit. We rode this from 96.33 up to 97.70, let's call it. Stopped out on that one for a profit. And again, this is kind of the beauty of trailing stops. You can catch some really big market runners when and if they kind of occur. So yeah. So we'll continue to watch pound CAD. Am I going to re-enter Aussie yen? Probably not. The move has happened. I liked it, and it didn't hold me in the trade, so I'm out. Pound CAD, again, really nice runner here. That entry ended up being pretty good. Took on a little bit of drawdown there, but again, rocketed into profit. And this one still is riding. For those of you guys who are in the group, I am watching for a higher low in order to trail this stop further into profit. So yeah. And again, any updates that I make will go into the forex trades category in our signals group. And same thing with the indices. I'm still watching S&P 500. If I do trail this one further, which I'll be watching for an opportunity to do so today, if I trail, you guys will see the updates going into the Discord there. And just a quick shout, if you guys are not already in the Discord, there is no better time than now to join us inside of the VIP. It is currently, if you message us while we are streaming here live, we're doing 45% off for Black Friday. Message us right now. Click that link that's in the chat or in the description down below. If you'd like to join the VIP, you get access to all of our indices trades, forex trades, commodities trades, gold and oil, and of course, stock trades as well. Now, you don't just get mine, you also get access to Frank's and Ivan, who you guys probably know from the streams. You guys know both of those guys. I know Frank will be joining us at some point on the stream. Ivan, I don't think he's coming on today. But again, if you would like access to all of our trading signals, our coaching webinars that we do, the trading live chat room, and our educational section, which includes our strategies in PDF form, now is the best time of the entire year to get access to that for 45% off. Just message us and we'll hook you up with a membership. Again, do not miss that sale. It is the best. If you're somebody who's like, I only wait for really good deals, there's no better deal coming than this. That is it. Okay. Take advantage. come join us. Come get on the action. If you're serious about this stuff, come into 2024 with us and do it right. I mean, we're out here showing, live brokerages, no nonsense. This is no get rich quick stuff. This is real trading from people who've been doing it for collectively. I think Ivan and Frank and I think we have like 20 years plus experience. So come join us. So let's see what else we've got. US 30, a couple people asking about US 30. Why not? Let's take a close look. Let's check it out. US 30 in the chat. Can we get a US 30 train? And also, I think we have some polls coming. I'm so ready for some polls today. Anybody else like polls? Oh, we got polls. We got polls. If you don't know what I mean, I probably sound like a lunatic. You're like, we got polls? Like Polish people or like ski poles? No. I'm talking about polls like surveys from the Telegram chat. If you guys are in the Telegram, go vote. We got 224 votes on a poll that we just put up there. I'm going to keep it hidden for now, but if you want access to the poll and you want to cast your vote, come join the Telegram. We'll drop the link here in the chat. There it is. Join the free Telegram and vote, cast your vote. We do stream votes, getting the audience's attention, or not their attention, their opinion on stuff. So we got a hot take coming in here today. So stick around for the poll. We'll reveal that. Maybe James will come on and walk us through the poll in a few minutes. But, well, we'll see. He'll come on at some point. Okay. US 30. Let's take a look. Is this thing overbought? James or Chandler, one of you guys, can we do a poll in the Telegram for US 30? Overbought or not? Can we get that poll made? Before I comment too much on it, I want to get you guys' thoughts. We'll do the poll. Again, join the free Telegram and get ready to vote. We're going to vote on, do you think US 30 overbought or oversold? We'll give the stream team a little bit of time to do that, but we'll come back to US 30 in just a moment. Okay. Let's see what else we can do in terms of market prep here. I'll go through the NASDAQ as well. NASDAQ coming down here today. Anybody trade the NASDAQ? Any NAS traders in the audience? I think I hear a poll, guys. US 30. The votes are coming in. All right, it's poll time. James is here. It's time for some polls. Let's bring him in. We'll say hello to the poll master. The poll master and the grand news wizard. James. What's going on, James?
I can hardly claim the poll master title. It's a collective effort between myself and Chandler most of the time, and this time this was actually a collective effort between myself, Chandler, and Frank. Came up with some of these options here. So we have, what is the best trading strategy? Now we like to get a little controversial, a little spicy with the polls. We want the people to have healthy debate. So with the help of Frank and our good friend Google, we came up with this list of popular trading strategies. But we know that some traders develop their own strategies, such as yourself, Nick. I know that you implement a few aspects from a few different things and kind of find something that you feel works for you. So we have whatever Nick does there down at the bottom. But yeah, I actually haven't clicked on any of this either. We have 244 votes here, but I don't know the results of any of them, although I have a feeling I know which answer might be picked the most.
So let's do this. So again, if you guys are not in the Telegram, we dropped the link here for you. If you want to cast your vote and be a part of this, you can do so. It's totally free to join. Let's go ahead and vote on this. So the true trend following methodology sounds philosophical, sounds advanced. Really, it's just my trailing stop approach. So this is a trick question because the true trend following, that is the strategy that I use. And wow, look at that. Everybody tends to like it as well. Appreciate that, you guys. A lot of you probably knew the answer, but the true trend following method, that's where I trail stops. The reason I call it the true trend following is because true trend following involves really following a trend, not trying to predict its end, right? The idea is a lot of times people will put a take profit on their trade. And the idea is like, if you're doing that, are you really a true trend follower? Being a follower of a trend means letting that trend go until it tells you that it's ended, not predicting when it will end. So that's why I call it the TTF strategy, the true trend following strategy. It is available for download. If you're a member within our Discord, go download that PDF. You can read through my strategy and see if you like bits of it yourself. And again, the second vote that we've got here, James, thank you for putting this together for us. US 30, is it overbought or is it oversold? And of course, it sounds a little bit tongue in cheek when you see, obviously this price going fly high, sky high here recently, 35,000 being crested as we speak. But I'm actually going to say it. I'm going to say the answer is oversold. And obviously I'm like the most bullish indices person right now, but the reason I say it's oversold is that it still has not reached the highs yet. It's very far from the highs, even US 30. Still got room to go on a weekly chart back to the all-time highs, still 5.5% away. And the reason I say it's oversold is because I think that's where it's got to head. And it may not be immediate, but in my opinion, it's all relative perspective. Sure, if you're like an intraday trader, it's run really hot and it's probably due for a bit of a pullback. But I think if you're looking at it from a daily chart perspective, I'm not necessarily saying I buy it right here. I'm just saying I still think it has room to rise, especially when you take a look at some other areas like the Russell, which has really been underappreciated on a longer term basis. These are smaller cap companies that I think with interest rate concerns possibly behind us, this could be a bigger runner going into the new year, but we'll see how that all plays out. James, thank you for coming on the show. I'll let you go because we got Kenzo here coming up next, and I want to say hey to him before we hand over the stream for a few minutes for him to take over. So thank you for doing the polls, James.
Yeah, absolutely.
All right, there goes our poll master, guys. He you heard him say it. He claimed the name, said to heck with Chandler. He said, I'm the poll master. I'm just kidding. Both those guys do a great job helping to put the streams together. We got Kenzo joining us here in just a moment, guys, for a little bit of fundamentals as well as technicals coming to you live. But real quick, we're just going to thank our sponsors. We'll come back to Kenzo with some top setups here today. Check it out. Frank, are you really trading right now? We are literally traveling through space.
Yeah, I mean, thanks to 8cap, I can trade at any time and anywhere, even in space. And I get a free EDGEFINDER with it too.
That's pretty cool, but honestly, there are so many other brokers that I think are better.
That's it.
I'm ejecting you.
All right, Frank, let me back in. Come on. I'll sign up for 8cap, I promise.
Don't get lost in space. Trade with 8cap. If you'd like more information about how you can get a free EDGEFINDER, click the link that's in the chat or description to speak with one of our representatives and sign up with 8cap. There's some great free perks available. Check it out down below.
Frank!
Hey, Kenzo, welcome back to the stream. Thank you for being here with us. We're glad to have you back talking fundamentals and chart setups.
Yes, I am doing great. I hope you also doing good.
Yes, absolutely. Doing great. And good to have you back. For those of you guys who don't know Kenzo, Kenzo comes on the stream on a regular basis. He has a good mix of technical and fundamental analysis that he uses to find top trading setups in the markets. So we tend to overlap very nicely as both of us kind of use both the fundamentals and technicals to find better trading setups in the market. Kenzo, I've got a question for you in terms of the dollar. Is the dollar oversold here? Is it or is it going lower? What do you think? Is the dollar what do you think about it?
Yeah, on my side, I don't think it's oversold. If you check, it's been going up for quite some time. So yeah, I think it's actually the start of the downtrend. I think the market might still give us a nice push to the lower side. Where we are now, if we check the time frames nicely, you will see that the market can still push even lower. Where we are is not like the highest, but we still have the lowest bit of the lowest area that we can even reach. But I don't think we're gonna reach that very quick. We might take maybe some few weeks or even a month to reach that. But I can't say it's oversold. It's been pushing up for quite some time. Also, because of the inflation, as long as inflation is it's higher, obviously it means the dollar it's usually higher. So yeah, we're not actually oversold.
Sure. No, I think that's a fair point. And again, when it comes to markets, people love to point to the buzzwords of oversold, overbought. But you made a great point there with that, Kenzo. You know, the idea being
Yes,
this
yes.
has been a market that's been red hot on a fundamental
Plus-
and technical trend,
Yeah,
and now seems to have reversed.
So yes, again, I like the fact that you also follow the trends. So when it comes to the trends, trend can last like even 2 years or maybe let's say 6 months or something like that, going in the same direction. So like here, you can see that we started this trend around July, and now it's November. So if maybe we're following oversold, overbought, and stuff like that, it means we're going to be overbought around these areas, and that will limit us to take enough trades. So if you follow the trend, it's gonna be easier. I heard you said you only follow the trend unless if you see the break of a trend, then it's where you're gonna change your mind. But besides that, you just follow the trend. So that is the easiest way to say, yeah, as long as the trend is not broken. Unfortunately, this is still very fresh. We don't really have a proper resistance. But once we get that, we're going to say until the market breaks that resistance, we are still on a downtrend. We're not going to say we oversold or something.
Yeah, I think that's really worth mentioning. And Kenzo, while we're on the subject about perception in terms of oversold or overbought readings, I want to point out the retail positioning that we've got right now in the market. So what I'm showing you here is, of course, the overall positioning of retail traders, which we typically know that retail traders unfortunately tend to lose money when trading the financial markets. So if we see them very long on something or very short on something, it can sometimes actually be a contrarian signal in the markets. So when we take a look, for example, at dollar Swiss franc, what you can see is 84% of retail positions are, at least from the data that we've pulled, 84% are on the long side. That's giving us this bearish contrarian signal, right? We can keep going down the list. NZD USD does not hold up to that. It's a little bit closer to 50-50. But then when you start getting into this side of things, what you can see is that look at euro. You can see retail traders are very much shorting the euro, betting in favor of the dollar. To me, that is a signal to potentially be more bullish on euro USD, knowing that, again, retail traders are going against it. And dollar yen, actually surprising to me that retail traders are net short on this one, as it has kind of come down pretty hard. But I expect that this will likely shift. If the dollar yen continues to trend lower, what we can observe usually from retail traders is that as something trends lower, they typically go long. And as something trends higher, they typically go more short. So typically be counter trend in nature. So will be interesting to watch that, but we use this as a potential contrarian signal in markets. And I find that to be a really interesting positioning right now. Kenzo, I'm going to leave you to do the stream for here a little bit. We'll give you the floor to go through some setups and analysis here with the audience. I'll take a quick little break here and I'll come back and join you in a bit. But before I go, let me just let you guys know, if you do not already have Kenzo on your YouTube subscription list, Extra Hot Forex on YouTube, highly recommend that you guys subscribe to him, check out some of his content. And again, it's worth the subscription there so that you can keep up with what he's got to say. So Kenzo, I'll give you the floor here for a little bit and I'll come back and join you in just a bit.
Okay, thanks.
All right.
Okay, yeah. Good evening, guys. Good evening. Today we're a bit late, so let me just continue with the analysis. As you know, we're going to start with DXY. So on my side here, on DXY, we are actually going down. We are on a downtrend. So this downtrend we just broke out a few days ago. So it is still very fresh. We don't really have proper touches that we can connect a resistance, but we are going there. So which means, yeah, the sell, it seems to be very stronger, but one way or another, we know that the market will still give us some sort of reversal and still continue lower. Later on, as you know, we're still going to have FOMC. That might also maybe change things. We might see the market maybe aggressively trying to reverse, and that maybe might help us to start to connect nicely with some of the structures. So from this structure, we can easily see that the dollar is losing that momentum, which is good because it gives us time to look at other pairs which were actually going down. Now, at least they are starting to give us those bullish momentum, like GBP, USD, Euro USD. Also, Nasdaq, they are now pushing to the upside, you see. So I will be checking the pairs that you say I must check. I see someone said CAD JPY, Euro JPY, USD CAD. So yeah, I will be checking on those pairs. You can just let me know on the comment section which pairs do you want me to check. So I will start with GBP JPY. What's really happening on GBP JPY? I like the structure here. Previously, we had a very nice downtrend. You can see the market was pushing lower. Very nice structure. The market was going down. Now the market just broke out of that structure. We had a very nice retest. But from this breakout, it shows that the market is trying to do what? To get away from that downtrend. Now we are pushing to an uptrend. So now the market wants to do what? To give us a very proper or nice uptrend. So where we are now, we already have a very nice trade. You can see that. So why? Because this is an area where the market created as a support. But if you check, we don't really have enough touches from this diagonal support. Why? Because we are on a new structure. This breakout, it happens like last week, I think. So we still have a long way to go on this uptrend. It might push like that, but where we are now is just this support. One way or another, maybe next week we're going to get something like that, and we're going to continue with that uptrend. For now, the trend is still very fresh, and if maybe you were looking for a trade, I think that might be a very, very good buy there, but the market is moving away from that support. So EJ, okay, gold, German 40. Okay, yeah, I will check those guys. I will check those pairs. So GBP JPY, I see someone said GJ, so I already ticked that. So we're just waiting for this structure to mature before we get proper uptrend. For now, the structure is not really giving us that uptrend structure, but slowly we're going to get that. So let's check the other one. Let's check the other one. Let's go to the next one. I think the pairs that you say I must check GBP. I don't see GBP USD. GBP USD. I don't see that. Okay, I will skip this. I will go to GBP. Let me see. I will go straight to Euro USD. Okay. Yeah. Now we are on Euro USD because on the comment section we also have Euro USD. Crude oil, we will also check that. So on Euro USD, guys, we can easily see that since the market is losing the momentum, we start to see other pairs starting to gain something. Previously, yes, the dollar was very stronger. That's why we saw the likes of Euro USD struggling. But after this downtrend, we see a nice breakout, which we need to focus on this breakout because that downtrend is already getting older. So all these structures are still fresh. As long as whatever that you saw on DXY, it shows where the trend is going because that breakout of DXY, it was still new. So what do we see here on Euro USD? We see that, yes, the market is actually breaking out already or broke out already. So we see the market starting to push the upside. The market consolidated very nice, pushed up, smaller consolidation. Even here, we might have a nice consolidation before we see the market fly, you see. But what I know is we still need to get a proper support area. So which means we might still have a nice sell before we see the market pushing to the upside. Remember, later on we have FOMC. There is a possibility that dollar can get stronger, a little bit stronger, so that it might correct this trend. Then we might get something like that. So we need to check that. We need to check that. Even if maybe that doesn't really happen now, but one way or another, we are going to get a proper structure. But not now. Not now. Maybe tomorrow or maybe Friday, we don't know. For now, we are actually on a very nice resistance. The market created something there. It seems like the market will be coming back for a retest. If the market doesn't really break this, it means we might see a respect from this point. Then we will say the market will be trying to do it to push the upside, because that is also a structure that the market created. And you can see that that is actually a nice resistant area. The market might create a support once it comes here. Then we might see a continuation of that bullish momentum. And that can happen because already we are on an uptrend. That might happen. So FOMC in 70 minutes. Okay, that's cool. So what else? What else? Gold. I see gold all over the place. Gold all over the place. So what's really happening on gold? Gold has been acting weird for the past few weeks. It was going in the same direction as DXY, or sometimes the opposite direction. So this has been confusing. But what we have here is, even if maybe you check other indicators that will help you on gold, sometimes technical can also help you to understand what's really happening. So we had a very nice structure. You can see from what I see here, we had a very nice structure where it makes a proper downtrend. The market just broke out of that, and I see a nice retest. From this, I think we're going to have a nice bullish momentum. So if the market is breaking out of this area, we're going to mark that. So let's go maybe on 1 hour. You can see that. So on 1 hour, we can see that the market is coming back. Obviously, the market might be coming back for what? For a nice retest. The market might be coming back for a nice retest. Then we can do what? We can take a very, very nice buy once the market bounces back from that support or that previous structure where it broken out. So that might be a very, very good area for us to do what? To look for a buy. So this aggressive push there, it shows that the market was seriously on a very nice bullish move. So we're just waiting for what? For a nice retest. So I think it's just straightforward. I think we're going to see a nice retest before we see a push to the upside. Yes, sometimes the market can disappoint and the market can continue pushing lower. That is also possible. Sometimes the market can do that. Because if we check again, if we look at the other option, if the market continues, we can look at our left-hand side. You can see that even though we had a very nice structure going down, but it's not really a different. If we place a very thick structure there, it still makes sense. You see, it still makes sense. But for now, we're going to focus on what we have here and see if maybe we're going to have a retest, because we can see the market has been breaking all these structures. You see. So that's what I'm expecting actually from the market, especially on gold. So FOMC update. I think it's around 9 o'clock on my side. Maybe less than 2 hours. So US30, I don't see anyone with US30. Let's see CAD JPY, USD JPY. Let's go on USD JPY. Nasdaq, I don't really see Nasdaq. Okay, I see Euro JPY. I think I don't really have that. So let me go on USD JPY. I will add Euro JPY. So what's really happening on USDJPY? The best thing that you can do is try to use a bigger time frame so that you can see a bigger structure. So what's really happening here? We can see that, oh, the market has been pushing up. It's been aggressively on a very nice uptrend. Why? Because the dollar, it was on a very nice bullish momentum. So we easily see that this area and this points here, or that zone, or these zones, it's where the market reached before, and the market respected that. And after the market respected that, you can see a push to the lower side. So there is enough chance that the market can also do the same thing on daily time frame. I hope you see that. So once, I think we did talk about this structure a few weeks ago with Nick, when the market reaches this area, then now it seems to be pushing to the lower side. But for us to be safe, to say, okay, can we continue with this sell? Because we see that the market reached this point and started to sell. So are we going to do the same thing here? Are we going to just continue selling? Yes, but we have to follow certain rules. You can see that on the bottom side, we had an area that we can call a support. You can see that. So we're going to use that and say, if the market, let me just use a thicker line. If the market is going to continue pushing lower, maybe it will break that zone or that support area. Let me just do it like that. Let me remove this one. So now we have a very nice structure. You can see that before we had a very, you can see around that level, twice there. So if the market breaks this zone here, if the market breaks this area, obviously we will be ready to do what? To continue selling. But it's not going to be easier for us to keep selling around this area. Why? Because every time the market touched this support, we saw the market pushing to the upside. We saw the market pushing up. So it means for us to continue selling, we have to, but with caution, because the market might respect this area and go back to this resistance. So we can have a very long or a swing trade. If the market breaks that area, then we can say it's time for USDJPY to melt. So I see CAD JPY, I see Nasdaq, please. I see CAD JPY. I will also do CAD JPY and Euro JPY. Yeah, I think maybe on USDJPY you got it right. So let's push to the next one, which is Nasdaq. You can keep them coming. You can keep them coming. Then I will be checking them. So on Nasdaq, you can see we are on a daily time frame. So the structure is quite straightforward. Before we even change here, the structure is showing us some very nice structures there. You can see the market was pushing lower previously. So that was a very nice downtrend. And it's been here for since, I think, July or August until now. From here to here, you can see that this trend actually lasted for quite some time. You can see that it actually took maybe 1, 2, 3, 4, 5 months. Actually, that's very long. So after that, we can see a very nice breakout. That breakout is trying to tell you that I'm changing the trend. So now it's time for us to do what? To look for a very long buy, maybe for another 6 months. It's possible. So what we can do is we can just go on a smaller time frame, not really smaller, but 4 hours time frame, and try to see what we can get. We saw the market broke out of this, that trend. So now the market is pushing higher, but we can see that the market is reversing along the way. But the structures are not really clean because this is aggressively on a bullish momentum. Sometimes the market can do that, and the reversal, sometimes the market doesn't really have that timing. You can see the market just reverse anyway. You have to be patient because we just broken out here and we never had a proper retest. Remember, in few minutes or 1 hour and few minutes, we're going to have what? We're going to have a FOMC. I'm not saying it's going to sell, but we might get some proper moves. Maybe the market will reverse a little bit before pushing up, or maybe the market will just continue. We will see. But what I'm expecting here is, let's try to mark these areas. You see that area? Let's mark that. Around here, we can mark that because it's where the market is giving us those points. We can say the market is respecting. I will mark this area. And where we are, I can mark that area. So those are the high and lows, low and high. So we will see if maybe the market goes beyond that. Yeah, we can say, yeah, we can sell because we saw the market was creating sort of a resistance there. And this is 4 hours time frame. Don't forget. If we go on a small time frame, you will see how many candlesticks are there. So you will see that actually the market can consolidate maybe before pushing up, or maybe the market will just push lower. But if it pushes lower, we still have some options. We will say if it pushes lower, we will be waiting for a nice retest before again, you see. So I think I did NASDAQ. I see someone saying US oil or crude oil. US oil. I like US oil because the structures are proper. So US oil, what's really happening on US oil? Very straightforward. Structure, we can see that we are on a very nice downtrend. The market, it's been pushing lower for quite some time now. And unfortunately, I did not really check what's really happening with the OPEC companies or countries, whatever, if maybe they're going to cut or increase the production or the drilling. So I'm not really sure if maybe we're going to have some aggressive push or something. But the structure shows us that we were on a very nice downtrend and the market just broke out. So this seems to me as a very nice retest. We might see the market pushing to the upside. I hope you do that. If you follow in US oil, obviously you have to check the fundamental and see what's really happening. For those who don't know maybe the fundamentals for US oil, they can go on on Forex Factory. On the calendar, you can see that we have energy, we have metal and stuff like that. So I hope you see that. So let me see if maybe we can check the last one. USD CAD. I see someone said check USD CAD. Okay. Yeah, I've been checking USD CAD during the day. We are on a very nice uptrend. And during the day, we also had CPI. It was not really good, so I thought maybe the dollar was going to push the upside. But no, it was very weak. So we don't really see a very nice push. I was expecting to see maybe a proper push to the upside. But besides CPI, yes, we can see that the market is on a very nice support area. So yeah, we can expect the market to respect this area and push up, or maybe a breakout might also happen. I think that it's enough for now. I think that is enough for now.
Kenzo, thank you for doing all that. I know you covered oil there. We covered currency crosses. So I'm sure a lot of people got a lot of value out of that. And I want to thank you for coming on the show here today to help us prep for FOMC meeting minutes, which do come out at this point 1 hour from now. So markets potentially set to move a little bit. And any prep we can do, that's why we bring on such great guests from all around the world. So Kenzo, I know it's a little bit later in the evening for you, so thank you especially for coming on and making the appearance. And just a reminder to those of you guys who are watching the show, we've got Kenzo's channel. We'll link it here in the chat for you guys who would like to find Kenzo and to potentially work with him closer. He has his own, obviously, groups and channel where you can keep up with what he is taking a look at. So Kenzo, thank you very much for coming on, man. And we will see you back on the next stream. And again, thank you again.
Thank you very much. Anytime, man. Thank you.
All right. See you, Kenzo. Yep. Always good to have Kenzo on, guys. He is a stream regular, and we very much appreciate having him coming out to the stream each week. Great mix of fundamentals and technicals, which, of course, we love on the show, and I know a lot of you guys do as well. So with that said, guys, we're going to transition to our next segment of the show. We're going to be going with Miko and Marco here for a little bit, taking a look at some setups, taking a look at primarily on the technical side. So we just did a lot of fundamentals with Kenzo, myself. We are now going to be transitioning to a little bit more on the technical basis with Miko and Marco. So they're going to go for a little bit. I'll bring in them in just a moment. But before I do, let me just remind everybody, if you have not already heard about the Black Friday sale that we're doing right now, I mentioned it earlier, but you can sign up right now for our signals or for our software, the EDGEFINDER Pro, which you guys have probably seen on the channel, the COT data, all that sort of stuff. It is currently 45% off. We are doing a store-wide super sale for Black Friday. Again, that gets you 45% off. It is our biggest discount of the year. All you have to do to get access to that is click this link that's in the chat right now. Click the 45% off direct message link. When you chat with us while we're live here, we'll get you that extra 5% off discount. So we're doing 40% usually, but while we're live, if you message us, you get 45 just by chatting with a rep who can get you set up with a membership or a copy of our software. So now, guys, we'll transition to Miko and Marco. I'll say hello to them. We'll bring them in and get into some technical analysis with these guys. What's going on, guys? Welcome back to the show.
Hello.
What is up? Hello, hello.
It's good to have you both back. We're going to be doing a little bit of technical analysis now. We just had Kenzo do a little bit of fundamentals and myself before that. And we'll be back with more good mix of analysis as we get closer to the meeting minutes. I want to just ask, as we jump into this, we'll go kind of around the room, talk a little bit about setups as we usually do, Miko and Marco. And then if it's cool, I might leave you for a little bit, get a glass of water, and you guys can just kind of take over the show for a few minutes. But before I do, I'd love to just see what you guys have to say. So maybe Marco, we'll go first with you. What are you? What's on your watch list here coming into today's FOMC meeting minutes?
Sure. So the dollar pairs are looking very, very clean. What I mostly trade is I trade these ascending or descending channels because they usually give a nice reversal trend, in this case, to the downside. So I'm seeing a very, very clean channel, just barely struggling to break the highs on the euro and the US dollar, struggling all the way to the upside. And now I'm seeing even a bit of momentum right here. So this to me is enough momentum to look for a setup. And I'm looking either to get in on a flag or I'm looking to get in on a nice break and retest trade. So this pair is 100% on my watch list, and potential to the downside is there. EJ is descending on the other hand. So I'm seeing this on EJ. Because of that, I'm expecting a push up and the trend up. So I'm looking for this. Still no confirmation on this pair. What do I mean confirmation? Well, confirmation would be this reversal impulse. Here, there's no impulse just yet. AU is pushing down, not as strong as EU, so I still want to see the confirmation. I want to see that nice push. Then I would get in on a sell. AJ is a bit flat, so a bit range bound in this area, not on my watch list. The pound is ascending as well, but again, I'm not seeing the confirmation. I'm not seeing this as I'm seeing on the euro and the US dollar. Final one for me today is NJ. New Zealand Japanese yen is flat as well, same as AJ, so not on my watch list. To recap, EU the best, EJ looks okay, Aussie US dollar looks okay, AJ nothing, pound looking to sell, and NJ nothing. So yeah, definitely some high probability patterns forming in the markets. It's not as slow as it used to be, let's say 2 or 3 months ago for the strategy that I trade. So a good sign for me. And I'm alert, seeing the watch list, looking for setups.
Yeah, fair enough. And I like that Australian dollar. I think, as you mentioned it, I pulled it up on my end. And what I can see here is you've got a lot of wicking across the top here. And as many traders will kind of know, a lot of wicks on the top, what that sometimes can signal is exhaustion of a move. We've seen this big push to the upside. We're slowing down here. And as you pointed out on like the hourly chart, it could be due for a little bit more of a pullback. I think, even if you are a dollar bear, as I have been, and I know Miko and I, we aligned with that in our last conversation here. Even if you are kind of bearish on the dollar, it has become a little, it's been beaten down pretty bad. It could possibly be due for a bit of a pullback before an overall continuation, which leaves room for lower time frames to potentially capitalize on that. So, Miko, same question to you. What's on the watch list here as we get ready for meeting minutes?
So yeah, I'm looking at some dollar pairs. I do like the look of dollar Swiss going into the rest of the week. We're seeing a lot of bearish momentum for this one as of late. Of course, other dollar pairs have seen some similar momentum, but I do really like dollar Swiss. We're starting to really form with these lower lows and lower highs ever since we had this big break of structure. Recently, we have been quite corrective, so I'm hoping we can get a bigger pullback. So I'm actually hoping to see some dollar strength from FOMC, just from a setup point of view. I want to see some dollar strength so I can short at a later date. So if I can see a nice pop to the upside, or quite a big pop, that would be, but I will be looking to short. I also like Aussie dollar, similar setup, which you just had on your chart, which is the retest of these highs as well. And again, hopefully we can see some dollar strength coming in. And as you mentioned, with those wicks there to the upside, not a good sign. If you're expecting, this move to continue further, more likely to push down. So potentially you might see a correction. I also like NZD/USD. I was stopped out of this one last week. Potentially got into the trade a little bit too early in context of the market, but now coming back above the resistance. Again, with these wicks here, I'm not a big fan of this breakout. So I would like to see price push a little bit higher. And then I would consult again with NZD/USD for some longs, and also I do like NZD/CAD as well. This one's had a long-standing trend line, which I've noticed we're finding it kind of broken. So I'm looking to see if we can push back into that swing high there on the left. Seen some nice higher highs and higher lows, pretty big shift to the downside. So I'll see what we can do there for a retest and some longs. And also gold and silver looks like it's got a lot of potential to go higher. No kind of setup for me at the moment, though. I'll keep an eye out.
Yeah, fair enough. I think the gold market definitely probably a hot topic for the audience as well. So what I'll do, if you guys don't mind, is if you guys want to just take over the stream for a few minutes, I'll come back in 10, 15 and circle back with you. But we've got a long stream here today, so I do appreciate you guys' help. And I do also want to say, for those of you guys who are watching with us live, Miko and Marco both have their own YouTube channels. They have their own Telegram channels. They have their own way to connect with them on their own platforms. Stick around for a little bit. They're going to be going through technical setups. And if you're looking more technical, if you want more technical setups, more ideas, and to learn more about technical analysis, these are your guys. We do a show with them on a consistent basis for good reason. They are heavily requested on the channel. So with that said, we're gonna leave you guys to do that. We also have your channels in the chat right now. For those of you guys who would like to subscribe to Miko and Marco, their links are in the chat right now. And I'll leave you guys to go back and forth however you'd like to do it. We'll have fun with it, and I'll be back soon.
Sure,
Right.
sure.
Okay, see you guys in just a bit.
Sure. Should we do a Q&A? Look at the comments?
Yeah, go on then.
Yep.
See what's going on. Cooking with the comments.
Let me just open up the comments.
Hey, a lot of people from my stream. What is up? Hope everyone's doing well. Okay, I'm seeing a lot of yen pairs being requested. Marco, how many yen pairs do you look at?
So I look at only 3 yen pairs. So I look at EJ,
okay.
which is currently descending. So I'm expecting a trend to the upside, but I need a confirmation. As I was saying, I need that large push. After the large push, I will be looking to buy. Then I look at AJ as well. AJ for me personally is flat. I'm a trend trader. I'm not trading inside of these ranges, so I'm waiting for a large push up or large push down. My bias currently is completely neutral on AJ, I would say, and NJ for me is flat as well. So flat on NJ, and I can see the people want to see gold. So let me do gold, and then we'll switch over to you, and then you can do Japanese pairs and gold. Sure. So let's do gold. So for me personally, on this 1 hour chart, which I focus on, is I'm seeing a nice uptrend. Like zoomed in right here, I'm seeing this nice uptrend. And I would be looking to buy, to be honest with you. If I see a nice range here, a nice flag scenario, I would be looking to buy. Overall, if I squeeze out a bit, we were talking about this large descending channel, after which I expect a trend to the upside. That kind of happened now. But what I can see on gold, what mostly works is trading channels. So maybe buying the lows or selling the highs of the channel. I think that is more how you do it, Miko, right?
Yeah, more or less.
So you could be buying these lows as well. What I do, I focus very short term, and I just look for momentum. So this to me is nice momentum, and I'm expecting something like this to happen. Okay, so I'm not sure how to switch to your screen.
Okay, magic.
I did it.
Yeah, nice.
Okay, nice.
So yeah, I'm pretty bullish. I'm pretty bullish on gold as well, similar to you. I'm looking to see if gold potentially run back to the all-time highs ish level around 2050. So I'm looking to take some buys. I was trying to find some setups yesterday for gold, but I didn't get an entry how I was looking for. If I pull up the old trading view profile, feel free to check me out on trading view. But yeah, I was looking to buy gold on the retest of this area. So that was kind of my kind of watch list what I had coming into the week. We did see a wick into that level. That was during the Asian session, which I don't trade, so I'm asleep during those times. And then we had price kind of open up around here, and we had a big sell up to the downside. And normally I wait for my bullish engulfings to enter the trade. So I didn't get that, but we kind of got a big fake of that zone, and now price is pretty bullish. So it's kind of hit the level now. So there's not much I can do in terms of looking to trade gold at this moment in time. But my bias is still kind of looking for more bullish momentum for gold. But of course, with FOMC coming out, FOMC minutes coming out soon, we'll see how price reacts to that, especially coming into this high, because we could see some more downside. But if we can get a break, then I'm interested 2050 beyond that as well.
So you're going for the 2050 level, right?
Yeah, 2050. That's my overall scope. But if I do get into a position to trade, I don't necessarily will target 2050. I like my risk reward around the 1 to 2, 1 to 3 mark. So I'll probably look at some highs in there. But that's kind of like an overall overview on the higher time frames of where I expect the market to eventually end up.
Nice. Do Bitcoin maybe?
Okay, we'll take a look at Bitcoin. I don't trade Bitcoin, but we'll take a look at Bitcoin. So yeah, with Bitcoin, again, we've had a lovely move to the upside. The market is kind of moving in that kind of similar channel formation. So I was speaking earlier today, if Bitcoin can see some retracement to this area, which is around 30K, this would be a very interesting place to get into some long positions, because with Bitcoin, we had a very impulsive move. The market's starting to run out of steam. I know, Marco, you do look at corrective channels as expecting price to reverse and whatnot.
Yeah,
and that's kind of what we're seeing after very strong impulsive legs. So, we could expect a retracement soon enough. But of course, Bitcoin can be Bitcoin, and we can suddenly start flying. But a retracement into that area, it would be interesting. And also, I wanted to get your thoughts, Marco, on multi-time frame analysis, because I know you look purely at the hourly time frame. So what's your view on that?
Sure. So for me personally, just to touch on the Bitcoin thing, it's kind of reactivated itself. So there can be like 2 slow years, and then for 1 year it's rallying up. So for me, Bitcoin can be very seasonal, but if you get in the right season, you may get in on a very nice trend. Now, when it comes to multiple time frames, so I trade only on the 1 hour chart. And basically, I don't look at anything else. I look just look at this 1 hour. The reason is I want to keep it as simple as possible. And another one is the freedom of time. So when I'm trading during the day, I do not have to be glued to the screen. I can only check the charts on my phone, and it's much easier to have just one chart to check, right?
True. Very
so
true.
On the phone, it's very small. It's a small screen. Flipping through the charts, 15-minute, 5-minute, 1 hour, it gets very complicated. So just focusing on the 1 hour, focusing on some patterns on the 1 hour chart is what I found works for me. Now, there's no right or wrong way, but I like to keep it as simple as possible. What do you think?
Yeah, I mean, I agree as well. I mean, you want to keep it as simple. So because originally when I was looking at multi-time frame analysis, I was kind of looking at anything and anything on different time frames. So it wasn't very systematic, but I found I tend to find consistency when I'm looking for particular things on each time frame. So I'm basically just looking for trend. I'm looking at key levels. So when I look at that, I can see, okay, there's a big level here. Okay, I don't want to be buying into that. So potentially it helps me filter out trades, which I do take, because my main time frame I focus on for entries is the hourly chart. So I want to be aware for any big areas of value. So that's why I do look at the
Yeah.
daily, potentially the weekly. So I'm kind of staying away from that. It's not from a trade to trade basis, but just to make sure I'm kind of in the right area. So that's why I like the multi-time frame analysis. But yeah, it does make it a little bit longer. But I just use that filtration like Confluence for it.
Yeah. I mean, I get you with the large support and resistance areas. It is very smart to do time frame analysis. But for me, actually, some trades I have found that if there is like a strong, let's say, resistance level or support level like this, let's say this is a major support level, and price forms an entry right here, I have actually found, because of this strategy is momentum focused, that I have seen some entries work very, very nicely through these support and resistance areas and actually give me a big winning trade. So I guess it all depends on what works for you personally. For me, I just want to focus on the pure momentum. Yeah. So EU is dropping now. This is now perfect for me personally after this very clean ascending structure and this confirmation to a downside. Like during spread hours, which can be very slow, I'm looking for flag formations 100%. They usually form during spread hours, to be honest, as the markets kind of die down.
So what's your trading window then? Do you have a trading window as in the hours you trade with, or is it just anytime anything forms?
So I start executing trades on 8 a.m. London open on a Monday, and I stop at 5 p.m. on a London time Friday. So I'm trading throughout the night. If a setup forms, I'll wake up once, twice if needed. If nothing is forming, I'll just sleep through 8 hours. But yeah, that is the con. So the pro is freedom of time. But the downside is waking up if there is a setup forming. How often does it happen? Twice or 3 times per month. There's like a night where I need to really be on the charts during the night. So it is what it is. You don't get everything has pros and cons. So
yeah, 100%. I mean, that's interesting because for me, I operate similar, but I don't do the night. So I start trading from 8 a.m. London and I finish 5 p.m. London as well, but on the same day. So that's my trading window. But of course, as I've back tested, I can see there are multiple setups that do occur outside of those hours during the aging session or just slightly above 5 p.m., like 6 p.m., 7 p.m. Sometimes I do get setups in those times. But I know that I can get the results I'm looking for in the windows I trade. So I don't necessarily need to find setups, but I do sometimes, miss big moves, but I kind of just charge it to the game as I would, because it's very difficult to wake up in the middle of the night and then take a trade. But
you can take some really bad trades.
Yeah, some mistakes could happen, I could imagine. Yeah.
Oh yeah.
But I mean, with gold, just looking for a pullback and a retest of the high, and then I'll start being interested. But I think I'll just wait for FOMC to see what happens. With FOMC, would you take an entry now, or if you get one potentially, or would you have to wait for after?
So regarding news, I don't look at any news. I try to distance myself from news because I can identify them in the price action. How can I identify them? Well, if we just switch to my charts, usually news candles are looking like this. They're super big. They're much bigger than anything else in the price action. So this is one. This is the second news candle. This is a news candle. I can very easily spot them in the markets. This is news as well. So what I do, I just focus on my backtesting. In backtesting, I did not look at news. So in live trading, I just focus on the price action as well. Usually after news, we get a nice push. If we get a nice push right now like this, and price actually continues going down, that's a really good sign we're going to start a really, really big downtrend. So I would just distance myself from the news event and keep following what the price is telling me. What about you?
I mean, I agree almost 100% there, because when I'm back testing as well, I don't look at economic calendar. I just take trades whenever they form. And during my back testing session, I can see, okay, I'll stop tap to news, or maybe news hit my take profit. So I can see news helping me and then going against me sometimes. But I have noticed that some of the big news events like NFP, CPI last week, or the week before, FOMC not too long ago as well. Some of the big news events now have had some pretty big moves because they kind of vary. Like I think maybe last year or the year before, NFP wasn't really doing too much. We're seeing like 20, 30 pip moves. So I wasn't really bothered by NFP, but now NFP is doing like 100 pip moves. So when we are kind of in that cycle, I stay a bit more aware, but generally speaking, I kind of like to hold my trades through and trade through it. But
yeah, I mean, news is what pushes the market. Without news, there would not be much movement, right? So we definitely need news. And in my back testing, I actually noticed, for example, on the Aussie US dollar, most trades I take usually have a big news candle somewhere in the price action. So yeah, it's a good indication when I actually see a news candle that I'll get a nice setup, a nice trade after it. So is there any requests in the chat? US 30, US oil, CAD JPY. How do you guys trade over the holiday period? That's if you trade at all. So December, according to my backtesting, I did the last 10 years, and Decembers are very slow. Usually I get very poor results in December. What that means, I'll still trade through it, but I'll be a bit more careful. So I won't take some, let's say, I would say more valid setups. I would focus on only the 9 out of 10 or 10 out of 10 super high probability stuff, especially during around New Year's and around Christmas. What about you, Miko?
Yeah, for me, I don't really have much correlation with months in my trading. Like sometimes like a month could be good this year and could be completely bad the other year. So I don't really have a correlation between months. So I kind of treat the year the same the whole way through. But sometimes for the start years normally when I have my best. So that's a slight tendency. But other than that, I just trade the whole year through the exact same.
Interesting.
Pretty much.
What about prop firms? Are you doing any challenges right now? I know you did my forex funds one, right?
Yeah. Unfortunately, that one shut down. But I am doing funding pips. I'm doing a challenge with them. I'm kind of doing a little series on my YouTube channel. But
nice.
yeah. I'm currently down 0.8% on the account. Only taking about 4 or 5 trades, so it's still pretty early doors. But I've actually just had a losing streak recently, so it's been a tough start to it. But I've kept my risk managed, and I'm kind of just trying to document to see how, even with a losing streak, you could potentially go on to past challenges as long as you protect your downside. But yeah, I'm going to be documenting that, filming that from beginning to start. So should be fun. Should be fun. Extra pressure because it's online as well. But
yeah, I was gonna say when you put it online, it's extra pressure. It gets even more harder, right?
Yeah. But I have to admit though, when I'm actually taking trades, I kind of forget about it. It's only when I have to switch the camera on and I'm like talking about it, then I'm like, oh yeah, I just took a loss. But when I'm actually trading, I don't really think about the online stuff. What about you? Because of course you share your trades as well.
Yep. So for now, I'm pausing a little bit with the prop firms because my forex funds, it kind of exploded. So I'm a bit worried about the other ones as well. But next year, January, I'll probably start a new one. As I said, December is not my best trading period, but January, February, March are really, really good for the strategy that I trade. So I'm going to wait for January. Then I'll look at some prop firms, see what's out there, see if there is any new good ones, and then make a choice, basically. So waiting for next year.
Yeah, I mean, that makes sense. But yeah, someone did request US 30, so I'll quickly do a look over that.
Yep, sure.
So yeah, with US 30, things are looking pretty bullish for this one, and I'm looking to see if we come back to the highs there at 35,600. We're not too far away already. We've already broken through a very big kind of ranging area on the weekly chart, which I've got 32,700, 34,500. Sorry. So we've cleared this level. Therefore, the next key area I'm expecting price to end up will be that high over there. So the bias for US30 is pretty bullish, of course, broken out of this descending channel there as well. So I'm expecting price to end up back at that origin there at the high 35,600. So yeah, I'm expecting a lot more upside here for US30. It's getting a bit choppy now. We're trading at an area of value here with these highs. So I'm not too sure if I'll be so keen to jump into any longs on the retest of this because it just goes a little bit corrective. But if we can hold on to that, that could be a nice place to look to go long. Or if you have a deeper correction, this could be an interesting place to pick up along there as well. But yeah, pretty bullish on this one. What about on the hourly chart? What's your opinion? Marco?
On the hourly chart for US30, let's check it out. US30. Is it this one? It is, right?
Yeah.
Okay, so on the 1 hour, it's not looking good on this very, very short term. So price action has been really flat here, really flat. We had just this one push. In my experience, a single push like this out of really flat price action usually ends up just retracing and ranging around. So for me, my forecast is not good. I do not have a bias for this to go up, actually.
Okay.
I am seeing that overall there is definitely a strong move up, but in this short term, I'm not expecting much more upside. This to me is most likely a fake out. So I would wait for a nice large trend, something like this. Then I would look for longs. And I wanted to ask you, so how many trades do you usually do per week on average?
Well, so far this year it's about 1.5, but earlier this year it was like 2 to 3. But since the summer, it's probably about one a week.
Oh,
so
okay,
that's kind of as a year and a half. What about you?
So for me, trades per week, I do about, I would say one trade per week. That's kind of my average. It's even less some months, to be honest. So maybe 0.5 to 1 trade per week. That is kind of so 2 or 3 trades per month.
Okay, respect.
Good stuff there, guys, and thank you for taking over the show for a little bit. Give me a little break, as you guys know, you guys do streaming too. It is exhausting, so it's nice to rotate in and out and give everybody a chance to hear a little bit of you guys' thoughts. I even caught you guys looking at the Dow. I mean, that was a treat for me. So good to see you guys taking a look at my side of things. But also, I love that question you guys just spoke about in terms of the number of trades per week. Again, I think a lot of times, especially newer traders, they hear you say something like, oh, I trade like 1 a week or 1 trade a week. And that doesn't sound very exciting or, it doesn't really sound like what people think in their head about like a trader, right? People think like they're sitting at the desk and they're in and out of the markets all day and they're just slicing it up 100 different ways and making money the whole time. And it's like, it really is. It is very much quantity over quality when it comes to trading. Not to mention, every time you're in and out of the market, your broker charges you something, whether it be in swaps or commissions or both. You're paying to get in and out of the market. You might as well just find the right trades and let them work for you and avoid anything else. So I won't keep you guys on anymore. Thank you very much both for being on the show here today to help us out with prepping for meeting minutes coming out here in about 30 minutes. I'm sure that the audience appreciated you guys, and you guys' channels have been dropped again here in the chat. For those of you who enjoyed listening to Miko and Marco speak, please go support their channels. They have YouTube channels as well that you can keep up with. And thank you both guys for coming on. We'll see you on the next one.
Appreciate
it. See you in the next one. Goodbye.
See you guys. Yep, always good to have those guys on. And again, a nice mix. We go from talking fundamentals on the show to going then into technicals and then mixing the two. And the cool thing about having a variety of guests is that you do get a good mix of everything. And I think that's important stuff. So, real quick, as we come back here, we're going to go to Gary in just a moment. We'll play a quick break here. Give us a second to get everything set up with Gary. He'll be coming on the show. I'll be speaking with him for a few minutes before we get closer in here to meeting minutes. So we're going to take a quick break. Be back in like 30 seconds. Check it out right after this.
When your trade goes to the moon with 8cap, this is what it feels like.
3, 2, 1.
Right there, and there's your 8cap ad for the day. Definitely can feel like that when your trade goes to the moon. What's up, Gary? Welcome back to the show.
Thank you, Nick. Appreciate that, buddy.
Hey, Gary, I appreciate you coming on. I know you got a busy schedule like we do, so anytime you come on, I appreciate your commentary, especially as we get closer here to the meeting minutes. It's been a minute since we've talked, Gary, and I think, as we pivot the show back to fundamentals for a few minutes here, I would definitely love to get your mixed look, both technically and fundamentally, at as we approach these meeting minutes. We've seen the Fed become less hawkish. We've seen risk markets kind of take off here to the upside. We're actually seeing gold make a move higher. The dollar's falling. What are you watching as we get closer to these minutes? And I guess any trades or things that you're looking at right now?
Yeah. So what's really interesting is how the Dow opens up every day and what the Dow move is, because we know that Dow creates risk on risk off for the currency market, because there's a lot of correlation between what the Dow does and of course what the dollar does, and then the dollar of course traded against the major counterparts creates trendy moves in other pairs. And so looking at the Dow this morning, Dow opened up lower than the previous open. We expected a fader gap, then of course a fader gap move, which means that if the Dow goes bullish, we can expect the dollar to fall. But now we're looking at the overall movement of the dollar. The dollar is set up overall bearish, but it is looking for a short-term rally. We actually spoke about it this morning. We said that we're going to be off on selling the dollar and looking at buying the dollar this morning. This morning through this afternoon, despite of what the news comes out this afternoon. I think the FOMC is just going to create some volatility in the market, but I don't think it's going to be the directional bias. I think what we're going to see right here is the short-term rally in the dollar, and then of course once it hits resistance again, we're going to continue with the down sell-off on the dollar.
Sure. So the dollar has had a pretty good drop here with, again, kind of that triple whammy. We have the Fed come in less hawkish, the NFP report, and the CPI. All those things, the triple entente, really caused the dollar to drop hard. But you're kind of making the point that perhaps that's a bit overextended in the short term. But where do you think, how far can a rally extend for the dollar index in this environment? So as you mentioned, dollar has been perhaps a bit overextended to the downside. It seems to be forming a nice low here as we speak. And perhaps with those meeting minutes, we could get some further volatility. But where do you think the dollar could get to if it were to bounce?
So the two things that I look at is two time frames, daily and of course the 1 hour time frame. The 1 hour gives me intraday moves where the markets are moving inside the daily, and the daily is giving me the overall setup of what I'm looking for. So if we look at the daily right here, the daily time frame is gone ahead and hit the 1.618 and actually traded through that and come back down to the support right here. So now we're getting the bounce of that support, which means that we could get the move coming back up to retest to 13,019, which is this level of resistance. Now, if it goes through that level of resistance, then the next thing we have to look for is the next level of support, which is here at 13,098. And so this is where the market could go back up to if we have a strong rally. Now, you got to look at other currency pairs to look at how the markets are set up in relation to everything else, because the dollar on its own doesn't necessarily mean currency pairs are going to move in that direction as well, because it's traded against another currency. So one currency is traded next against the other. So it's not just the dollar movement. So if we go to, for instance, as an example right here, if we go to Euro US dollar, I'm going to pull up that pair right here. Euro US dollar is set up right here where we have gone ahead and once again overextended. Oscillators telling us we're overbought on this right here, and we're looking for a corrective move. So the corrective move on the Euro US dollar tells us that price can move back down to around about 1.0830. And then at that point, turn around and start heading back up north. So if I see these type of things correlate or setting up and confirming on other currency pairs, then the dollar is sort of like a leading indicator, but it's not the the only thing that we have to pay attention to. Another good example right here would be US dollar CAD. US dollar CAD set up this big rising wedge, call it a wolf pattern right here, and we broke out to the downside. We failed to break above the fifth wave right here. We broke down below the trend line, and now it's on its way down to around about 34.59. So that's a bearish dollar. So when you look at this, you go, oh, but hold on a second now. I thought we are going to go north. Well, we are, because at the moment right now, the dollar is actually sitting inside this range. So which means that we can go back up to around about 37.88, maybe 3800. And then at that point right there, have a false breakout and start heading back down south towards 34.59. And this is confirmed here on the lower time frame. You go to the lower time frame right here. You got the same sort of pattern forming right here. There's that wedge. And then you can see right here, the intraday swings are also confirming markets inside of the range right now. And a breakout here would give us another setup for a downside move. So again, short-term rallies is expected between now and Friday. And then as we're heading into the weekend, come next week, we're probably expecting the dollar to continue to fall.
That's a great point too there, Gary. The way you've broken down the dollar index first, you look at the kind of the basket approach, right? Because obviously, here in the audience, if anybody's confused about that, when we talk about, the dollar index, obviously placing trades in the dollar index is not what we're referring to. What we're talking about is use that dollar index as kind of your gauge of overall dollar strength compared to its peers. And then you can actually go take a look at the individual currency pairs, like Gary just broke down euro dollar and dollar CAD for us. Euro dollar especially was interesting to me too, Gary. You mentioned this level here that I've got marked as well. So you're saying kind of a short-term potential pullback here. And I know just from our previous conversations in the past, Gary, that you focus on a good mix of both the shorter time frames as well as the longer time frames. So perhaps this is, you can see this candle kind of causing some volatility. Of course, we have meeting minutes in 20 minutes here now. That could cause some volatility, and perhaps if anything is a little bit dollar bullish, could give us that pullback that you're talking about. So I guess last question I would have on that euro, if you think it's coming down, if you think it has potential to retest this area, is it bullish from there? Is the bigger picture for the dollar still weakness, which could give things like euro and pound higher prices? Or do you think that this has a potential to be a bigger kind of reversal? What do you think?
Well, if I go back to the daily right here, and I flip it over to the weekly time frame, just to give an overall directional bias of what the market's doing. If we look over here, look at this big downside wedge. If we pay attention to all these wedge patterns that are forming in the downward trends or upward trends, right now we should be paying attention to this weekly setup right here, because this is going to tell us where the market's overall targeting. And so right now, the dollar, the euro is set up to continue to be bullish. Therefore, dollar weakness across the board and the long term is probably the way to go, because the euro, this level where it's trading right now, is critical. And as it starts bouncing back and forth inside this little bit of range that we're in here, we're going to see this. This is just going to be a temporary dip before the next breakout, because the market tests the wedges 5 times. On the 5th time, it then starts moving in that direction and starts breaking out in the opposite direction. So what we have here is exactly that. We have the market creating this 1, 2, 3, 4, and 5. This is the breakout point we're expecting price to move to. And this orange line right here is representing where we can anticipate the market to move to. So as price starts going back up here, I'm looking for price to come back to retest this target. And so that is ample space to the upside. So any dipping right here creates buying opportunities, maybe some short-term selling first and then buying opportunities. And then we're looking for price to go back up around about 1,800 to 2,000 pips.
Yep. Well, thank you for that, Gary. And I won't keep you too much longer, but I do want to make mention to something that we've talked about pretty consistently. Part of that's baked into that idea of perhaps a bigger move higher on the euro dollar is that if that dollar, there's this backdrop story. We've talked about the potential that the dollar's sole, world reserve currency could come further into challenge by some of the other, the BRICS nations and things like that. We've spoken about that. That's potentially a headwind to the dollar as well, which, as far as that euro dollar bullish prediction seems kind of like, wow, that's a really big move. if that dollar does get challenged, if other kind of countries do step in there, that dollar has plenty of room to fall if it had to make way for other currencies to join the party.
Oh, absolutely. And that's the biggest thing right now is because of that factor, that if the dollar does get challenged based on the reserve currency of the world, then this is going to mean that a lot of big high tech investors are starting to focus on hedging the dollar. And that means trade outside the dollar, and anything outside the dollar would go ahead and hedge it. Gold is one of the most popular hedging approaches. But gold, you'll start seeing gold continue to rally. Gold, you'll see people investing in outside the stock market and into something more international. So anything outside the dollar would be what could cause the dollar to even fall even further down as people start panicking.
No, that's a great point. And Gary, I know, we have you on the show pretty regularly, so maybe we'll have to catch up more about that and definitely speak more about that gold idea in the future. So I won't keep any more of your time. Thank you very much for coming on and helping us to prep for meeting minutes. And also, let me just say before we let you go, everybody who enjoyed commentary from Gary, we always like having him on the show. Please go support our guests. As always, Gary has his own YouTube channel. You can find it, FX Big Dog. He also has another one, Traders Network Club, both of them available on YouTube. There you go. Both of them in the chat right now. Click that link, make sure to subscribe, and go show some love to Gary in the future. Gary, thank you very much for coming on the show.
Thank you, Nick. Appreciate it, buddy. Ciao.
See ya. Yep. Thank you very much to Gary and to all of our guests. We're going to have Frank join us in just a few moments here as well. Of course, a in-house analyst here at A1 Trading. If you guys are enjoying the stream, do me a quick favor. We did a phenomenal, well, not really me. My team did a phenomenal job setting up this stream here today to get so many different guests from all over the world chiming in and helping us to prep for meeting minutes. If you appreciate the service that we're offering here on YouTube, totally free, we do work very hard to put these shows together. And if you appreciate them, do me a quick favor and do the rest of the team here a favor. Smash that thumbs up button. Let's get it a little bit of hype here as we get closer to the meeting minutes. There's almost 700 people in here. Thank you for being here. And again, we're about 20 minutes out, just shy of that, before we get the meeting minutes, which could potentially cause some market volatility. It's not certain, and it very much will just depend on what happens here. So, I want to also make a point here about that concept that Gary left off on. He was just talking briefly about the idea of gold and how potentially if that dollar supreme superiority complex, if that does come under threat at all, the place to be, in my opinion, would be really, it would be silver and gold. And that would just be the idea that if there's a concern about the dollar's integrity, that would be the spot to be in. Now, I'm not necessarily that I think is a longer term prediction and something that's very difficult to time. But if it does start to unfold, of course, we'll be doing our best to cover it here. As we do with everything else on the stream. In terms of shorter term price action, for those of you guys watching gold, which I know is a lot of you, price action still looking strong. However, we've hit a roadblock. You can see price holding this 2005 level here as, again, we get this wick across the top, but watch for meeting minutes to either break that out or confirm the rejection. Now, what I mean by that is that if we get something that is strong for the dollar, it is likely to cause the gold market to retreat further from this level of resistance. However, if you get some further confirmation from the Fed that perhaps they are truly done with the rate hikes and that now they are starting to debate the idea of rate cuts and when that could be, any suggestion of when that could be, I don't expect it to happen. But if it were to be mentioned, if there was any conversation about rate cuts, I would imagine that the dollar probably drops hard and that gold could continue higher. So we'll watch for that. That is really the question of the day. Are we going to get any mention to rate cuts in today's meeting minutes? Is there any conversation there? That's, I think, what would get you some further propulsion on this rally on gold, as well as things that are risk-on oriented, like, for example, the S&P 500. Which I believe Frank and I are both still long. I know he's trading some things as well on that front. So we'll discuss that with him in just a moment. But before we do, let me just remind you guys, we are currently doing our Black Friday sale. If you're somebody who watches the streams on a regular basis, head over to a1trading.com/edgefinder. Currently, you can get 45% off by sending us a direct message on our website. Now, let me just clarify this. If you're somebody who watches the streams on a regular basis, our Black Friday sale is here. If you're somebody who has been thinking about getting a copy of the Edge Finder, you can actually currently get it for 45% off if you direct message us on our website. So there's a link in the chat which will take you to the support chat. So if you click that link, it's going to take you to this little pop-up where you can click in for the 45% off discount while we are live here on the stream. So if you are somebody who's been thinking about getting a copy, or you're interested in getting access to our Signal service, both are 45% off. It is our biggest discount of the year for our Black Friday sale. So take advantage, shoot us a message while we're live here, and somebody from our team will get you hooked up with that special discount. Again, that is the biggest you're going to get from anywhere on our various platforms, Telegram, Twitter, anything. This is the best spot. This is the biggest discount we're given. So check that out. Again, click the link. It's in the chat right now, right there. Okay, guys, we're going to take a quick break. We'll come right back to Frank, who's going to help walk us into this meeting minutes. We've got about 10, 15 minutes to go here before the meeting minutes do drop. So stick around with us. We're going to take a quick break, 30 seconds, and we'll be right back after this announcement from our sponsor. Check it out. Frank, are you really trading right now? We are literally traveling through space.
Yeah, I mean, thanks to 8cap, I can trade at any time and anywhere, even in space. And I get a free edge finder with it too.
That's pretty cool, but honestly, there are so many other brokers that I think are better.
That's it.
I'm ejecting you.
All right, Frank, let me back in. Come on. I'll sign up for 8cap, I promise.
Don't get lost in space. Trade with 8cap. If you'd like more information about how you can get a free edge finder, click the link that's in the chat or description to speak with one of our representatives and sign up with 8cap. There's some great free perks available. Check it out down below.
Frank!
We are back with the man, the myth, the legend, the guy who just kicked me out of a spaceship. What's up, Frank?
Hey, how's it going? I didn't mean to do that. I'm sorry.
Well, Frank,
that's what the script said.
We've been running that ad like all month long. So at this point, you've probably kicked me out of the spaceship like 400 different times. So
probably
you're getting really good at it. That's the good news. I guess the bad news is the questions as we get close to this meeting minutes. Is this gonna take the punch bowl away from the risk on sentiment? Is there anything in meeting minutes that you're most interested in looking out for?
Not really.
Okay.
I don't think this is going to be any different. We always have this conversation. At this point, no, I don't think there will be volatility for sure, but I don't think it's going to change anything he's been saying. Just being cautionary. We recently saw our latest CPI numbers come down. There really isn't a need for a hike, I would say.
Mm-hmm.
I think it's still in the same camp as let's see where the data goes. And it's the fact that we've kept interest rates at this level and haven't done anything with it for the past couple months or whatever, and inflation's kind of agreeing with it coming down and doing that. That's just more of an indication that they don't need a hike. He's going to be cautionary for sure, but I don't think he's going to say anything. What I do think is going to move the markets, however, we have earnings season right now. We had some retail earnings come out and they were lackluster, caused this isn't a giant pullback, but it is a pullback in the market. And what it looks like is price setting up for a potential long here. We got support on 45.25. We have a trend line. Our price projectors still looking to the upside. Well, for the past 60 candles, and Nvidia is later today. So once the market closes, then we will get Nvidia's earnings at some point tonight, and that's what's really, I think, going to drive this market. So I'm gonna lean on the side of bullishness that Powell's going to say his thing. It's not going to be anything new. He's going to leave that idea open for rate hikes if we need it. The journey isn't over by any means, but it's also not. It's not what we initially thought at the beginning of the year, where we saw like a lot more hikes than normal, or than what we actually got. So I think what it all comes down to is Nvidia, and this is this is a chart of the S&P, hopefully, maintaining its support level here. The 4-hour looks pretty good for now. We have 10 minutes for it to close. So if we get a close like this, it'll probably look a little less gloomy for the day, as we've been down most of the time. But that orange line up at the top is are the March, or the earlier in the year highs, I believe. Right, they could be March highs. Let me make sure I'm not being
Yeah, Frank, and just to clarify for people who might have been wondering what you meant by the NVIDIA importance. So again, if you're somebody who trades indices, at the end of the day, you're trading the stock market to some degree, right? You're literally trading a basket of stocks. And one of the stocks that's led the rally, and if you're a currency trader or a gold trader and you're like, what does this have to do with me? Everything, because it's all about risk sentiment. If you're a currency trader, NVIDIA still matters to you, because NVIDIA has been the darling of Wall Street and the leader of the AI tech rally that we've seen in the stock market world. That stock market rally is what is driving risk sentiment and possibly going to change the narrative in the currency world as well. I make this point often, but all markets are related in some way or another, whether you like it or not. If you trade currencies, the stock market, the gold market, the dollar, they all impact your trade still. And that's why we try and cover a good mix of everything on the shows. I mean, Frank and I, we go through anything from gold to yields to stocks to indices, whatever we're trading. It all kind of impacts one another, especially if you're trying to be a true fundamentalist. So Frank, I definitely agree with you on the NVIDIA importance is there. And of course, in terms of meeting minutes, I made this point just prior to you coming on. One thing that I think could be market moving and potentially really an upward catalyst, potentially, would be if there's any discussion in this meeting minutes. Of course, this is a conference or a behind closed doors discussion that is basically declassified to the public. That is what, of course, meeting minutes is. That's why it's not going to be an immediate spike. For those of you guys looking for an immediate spike, probably not going to happen. Probably going to take some time for people to go through the minutes and go through this conversation. But the idea I would say that I'm looking for is, are there conversations in the Fed official conversation? Is there the potential of rate cuts on the table? Is that even being discussed? Or is it simply going to maintain its presence of, we are just going to pause here. We have no plans to cut. We have no plans to hike. You know what I mean? Do you see what I'm trying to get at?
There aren't any indications I've seen from the Fed, or from Powell at least, that there will be any cuts. The only thing is, I've been seeing articles about that. Investors are anticipating rate cuts, which I think is a bit misleading. I don't think rate cuts are coming soon, but I'm not sure how forward-looking investors are in terms of monetary policy. So he could mention, and this is not a prediction, but it is possible he could mention the idea of it at some point next year. And even then, it wasn't even forecasted for there to be a cut until Q3 of next year, which was already set in place. So if he mentions that at all, though, if he says anything about keeping that idea open for rate cuts, instead of talking about the idea of rate hikes, that's going to be wildly bullish for the indices. But however, I don't think he's going to talk about that. I think he's just going to say the same thing that he's always done. And every time we come on here and we talk about it, he gives us an indication in the previous statement, and then he's very transparent. I don't think he's going to go the rate cut path yet, but I think investors might interpret what he's saying as a certain indication we're going to cut at some point. So,
and Frank, let me get fundamental on this too for a second. Here's the thing, right? I think that you're probably very much correct. Of course, we'll see what the meeting minutes have in store for us, because both of us could be wrong about this, but I generally agree. I don't think that you're going to get in the meeting minutes too much discussion about rate cuts, because here's the thing. What the Fed doesn't want to do is they don't want to overly signal, hey, we're done. Because what happens is then the markets get really excited and yields drop precipitously. And the problem with yields dropping suddenly and quickly, here's the problem with that. That would suddenly loosen monetary conditions, which would undo the efforts of the Fed. They wanted to tighten things up so that the economy would chill out a little bit. If they sound too optimistic, and this is why we make this point very often, they talk defensively and they don't give you an inch, because if they give us an inch, the market goes with it for a mile, you know? So I think that there is this possibility that, as you mentioned, we're probably going to get defensive language. We're going to say, you know, neither rate hikes or rate cuts are on the table at this time. We're going to be data dependent. I think that's what you're going to get. And that's why I think you probably don't see any sudden surges. But the reason we do these is because there is that off chance that we do get something. And as you mentioned before, the idea of any indication of potential rate cuts, market's going to take off. And I don't see any real indications of rate hikes. So I think that, you know, the risk, in my opinion, would be being on the short side of the S&P right now. I think that as crazy as it may seem, if you're watching S&P or gold, or if you're shorting the dollar, you know, I think it's more likely to continue higher for stocks. I think the likelihood is that the dollar continues lower. I think that's where the risk is. I'm not saying that's a certainty. I'm saying that I'd be more afraid to be long dollar than short dollar. I'd be more afraid to be short S&P than I would be long S&P. So that is just my opinion as we go into the meeting minutes. But so
but that chart you have pulled up on the dollar too,
Mhm.
there isn't an indication that there is dollar strength on the fundamental side. This looks purely technical. So look at these past couple attempts at the lower trend lines. We get you know, a buying pressure on the day. Sometimes it completes the move to the top of that channel. Sometimes it doesn't. Last time it didn't.
Right.
So every pop-up, if this one still, you know, maintains the course of what we've been seeing, it will probably be a less volatile, you know, move to the upside. We saw a big one completing the channel, all the way back down to a lower low, coming up a tiny bit, can't even get, maybe gets halfway, comes down. This time, hopefully less than that. I think this is just purely a technical buy here. I don't think many fundamental factors are backing the dollar right now, except for, okay, it's sold off pretty hard, so maybe it's due for a minor pullback or a little bounce. So I see why people are dollar bullish, but in the long term, like if we're looking months from now, I don't really see dollar having that sort of strength or momentum that it did earlier in the year.
Yeah, and I think, you know, one chart to keep on everybody's radar is, if you're somebody who's a gold trader in the room, if you get something, and again, I want to reiterate, everybody's gonna, every time we do meeting minutes is not an economic number that drops like a rock that causes markets to spike one way or another. It is a recap. It is basically the scribed notes of a behind the closed doors conversation amongst Fed officials. So it's not likely to cause a spike one way or the other. Could it happen? Sure. But most likely it is going to be kind of a potential volatility indicator in the next, you know, 30 minutes to an hour. And we'll try and find any information that we can. I just want to say, as we get the numbers here in just about 30 seconds, we'll try and get anybody in the audience who wants to chime in and give some findings from it. The meeting's notes we'll pull up and see if we can find out some more information on them. But again, we've got breaking news here in about 10 seconds. So Chandler, if you would roll our breaking news screen. All right, guys, and we should get meeting minutes here in just a moment. Now, again, like I said, unlikely to cause a huge spike, but we will see if anything surprises. Meeting minutes should be made publicly available at this time. And the reason there would be any spike would most likely be some sort of algorithm reading through it and finding something of importance. But we will see. So meeting minutes. We can try and find them. But if anybody finds out something about the meeting minutes, if you see some headlines, if you see something found or reported, please share it in the chat, and we'll try and throw it up on the stream or something like that.
I don't think we're going to see any numbers per se. I think it's all going to be kind of him talking about potential ideas. So right now, not really seeing anything. I guess UJ is bouncing, but the indices are not moving that much. Gold is kind of where it's at still. But yeah, I think the volatility here will be short-lived in either direction. So I don't know whether to think of this as noise necessarily, or just, same old sentiment, same old Powell.
So for meeting minutes. So just a reminder, the meeting minutes, they're not going to be Jerome Powell speaking. It is simply going to be just a document of kind of meeting notes. But let me see. I'm trying to pull up.
I don't see anything changed. I see further tightening if inflation is not going where they want it to go. That's, by the way, what he's always said. They're going to proceed carefully.
Yep, I'm looking for any headlines. Fed sees further tightening if inflation progress is insufficient. Pretty much exactly what you would expect them to say. I'm just trying to do any findings. If you do guys if you have something in the chat, please feel free. Sebastian says all participants agreed the policy decisions at every meeting would continue to be based on totality of incoming information, sticking with their idea of being data dependent. Participants noted that further policy tightening would be appropriate if information showed progress to inflation goal was insufficient. Again, very much in line with what you might expect.
So I don't know how the market will take it, because I can never predict where it's going to go on some news like this, but it's the same thing. I don't think anything has changed.
Right. So I've got this pulled up as well. So Fed minutes, all on FOMC agreed to proceed carefully on rates. All on FOMC saw rates remaining restrictive for some time. So again, exactly as I guess expected in terms of commentary, because here's the thing, right? If they do see rate cuts, or they do see if they do see rate cuts anytime in the future, they're not going to say it. They're not going to tell the market that, because then the market will just run with it and loosen monetary conditions far more than they want them to. So again, very defensive as expected so far in what I'm seeing.
I have a question for you, just out of curiosity. If the Fed has been saying for the past year or so, or even more, about how they would leave the idea open for rate hikes, and then they would hike, are we now just waiting for him to say? He's obviously not going to say we're going to cut rates, but do you think he will change the narrative and now say we'll leave the idea open for cuts? Or do you think that's...
I think in the last, at least in terms of Jerome Powell speaking, Jerome Powell, in his last thing that was kind of interesting, he pointed out that the risk to cutting was becoming very similar to the risk to over hiking. So I think that was like the major shift in policy, right? Like, instead of just like, inflation is a big risk, we need to keep hiking, it became, rate hiking and rate cutting can both cause a lot of risk. So that shift was pretty big. I think that, going forward, I think they're going to be data dependent, and they're going to leave it very much up to the deadline about their decision to cut. Because again, if you and I were the Federal Reserve, Frank, I mean, think about it from that perspective. If your job is to get inflation under control, if you tell the world, hey, we're done rate hiking, everything is going, risk sentiment's going to massively jump, and everybody's going to go spend a tremendous amount of money, get back involved in, borrowing money and all that stuff, which caused inflation in the first place. So I think they're going to continue to say stuff like this, which is another thing we just saw. Fed minutes. Participants noted that inflation had moderated over the past year, but remained unacceptably high and well above 2% target. I mean, that is exactly what we've seen for like a year at this point. But we keep going. Fed minutes. Participants noted there had only been limited progress in bringing down core services ex-housing inflation. So again, defensive language, still pointing to the problems, not going to ever admit, hey, we've had a lot of success, because if they say that, the markets will jump. So I think that you kind of have to read these with a grain of salt. You kind of have to read into them and say, if there's any softening in the story, it's potentially risk on. But right now, it doesn't seem to be causing too much of a stir.
I do think it's true, though, that core prices have been a little more stubborn than the regular month over month and year over year rates. So it makes sense to be cautionary on that front. So
yep. And I should say too, Frank, we get the COT data on Friday. For those of you guys who are COT fans, we will have this up on the it'll be next Monday when we next report this. But think about this too in terms of institutional positioning. You still got dollar overall pretty bullish. Gold still very much bullish. I think that's interesting. Though, of course, the latest filing showed euro interest. I thought that was interesting.
It was negative for gold.
Yeah. So
it
institutional money
for the indices as well.
Yeah, except for SPX, which barely hung on to a bullish kind of bias there. But I'm really curious to see the next round of COT data, Frank, because you've got gold running hot here, and as we see this thing kind of trend higher, it makes me wonder if we're going to get confirmation on the COT side on the next round of filing. Of course, what I'm referring to, if you guys don't understand what COT data is, it's a weekly report that shows what institutional money is bullish or bearish on, according to the CFTC's commitment of traders data. We have a software here that we're using on the stream here to basically showcase institutional money flow. What are they buying? What are they selling? This is available currently. We're doing our Black Friday sale. If you have not already taken advantage of our Black Friday sale, our software right now is 45% off. If you have not gotten a copy, now is your chance to do so. We've got a link in the chat. If you click this link, you'll be connected with someone on our team. You can get access to, again, our top software here at A1 Trading. We put on these shows trying to bring value to the community, but we are at our core, what we do is we build software tools for traders. So if you want access to the Smart Money Tracker, if you want access to our seasonal data, our top setups algorithm that Frank and I have built together over the past year and a half. If you want access, again, it is currently, I know it says 40% off, but if you message us while the stream is live, you can get 45% off the price. It is a one-time fee to get access to our tool, and it comes with a long list of valuable market data, whether you're a fundamentalist or you just want to include COT data in your analysis or top setups algorithm. Again, this is the tool for you. So take advantage of our 45% off discount. And again, all you have to do to get access to that is shoot us a DM using this message right here. Click the link there. It'll take you to our support chat. With that said, Frank, I don't think we're going to get much more volatility out of this, to be completely honest. But if anything changes, we'll be here to cover it. The dollar index is finding a little bit of a bottom, but in my opinion, a rally in the dollar is actually kind of an opportunity. As you pointed out, each one kind of being met with resistance, possibly that opportunity to get short again. So I guess we'll keep an eye on that as we watch the way the dollar folds out here.
Yeah, it doesn't really seem real, I guess.
Mm-hmm.
Obviously, it could complete the move all the way back up to the channel, but I don't see a reason why. I know the markets have been selling off recently because we were so overextended from the beginning of November to now, we just saw this incredible run. So
Yeah.
today's move is probably just going to be, or the next few days could just be mixed, bearish, whatever. But I think, this is the same thing we've heard. So
Yep.
it's
Well,
nothing.
thanks for joining and reacting with me, Frank, so far. We'll let you go, and again, thank you for being a part of the show here today.
Yeah, thanks for having me.
See you, Frank. Yeah, guys, again, not the craziest initial reaction to meeting minutes. And it does seem like, as we kind of expected before the event, we still saw the meeting minutes overall come out pretty dang soft in terms of, well, not soft, pretty defensive, right? Not revealing anything, not any sort of big, risk on reveal or anything like that. I am still long the S&P 500. I've been in this trade for, at this point, 21 days. This is much longer than my average hold time. But this trade, this signal that was shared in Discord, has just gone up and up and up. This has been my top trade of the year by far. And I should also say, we mentioned the EDGEFINDER, but you also can get access to our signals right now. The way to do that, same link, direct message us. We'll drop it again in the chat. If you want access to our Black Friday discount to get access to Frank, who was just on the stream, myself, and Ivan, we share all of our trades in deep detail. So the point with the service is to basically show our trades with full explanations and breakdowns, right? Our entries, our stop orders, the explanations behind the trades, screenshots of the trades in full detail. And again, these trades are being taken on live capital. We're not mess around, no fake demo accounts, no nonsense, no MT4 tomfoolery, real trades, real stuff. So if you want to trade alongside Frank, Ivan, and myself, we trade with a mix of fundamentals and technicals, and our signals are currently 45% off. It is a one-time to join, one-time payment to join. If you are interested in that, come take it to the next level with us. We are, like I said, no nonsense, real traders trading real live capital in front of our community. So if that is something you're interested in, our money is where our mouth is. So come join us, and you can sign up using the link in the chat here. Again, 45% off. It brings this price down to almost half its usual price. If you message us right now while we're on stream, we'll do something extra special. If you message us right now, before this stream ends, we'll do 50%. That is only time we're going to do it is this is the last kind of major stream of the month for us. So if you would be interested in getting access to the signals or the EDGEFINDER for 50% off, last call on that for the entire year. Take advantage of that just by messaging us, letting us know you just watched the stream and that you saw the 50% offer, and boom, bam, click the link right there. So with that said, guys, thank you to everybody who supported our stream here. We stayed live for 2 hours and 16 minutes. That's pretty good. We brought on a whole list of different guests to take on the markets here today. And I hope to have some of you guys join us inside of the Discord so we can continue to do so beyond the stream, trade alongside Frank, Ivan, and myself. And with that said, guys, have a wonderful rest of your day. And to my friends in the U.S., happy Thanksgiving. We're coming into the holiday here. So I got to get out of this office pretty soon and spend some time with my family. So come join us in the Discord. We'll keep the conversation rolling there, and have a wonderful rest of your day. See you guys. All right, Frank, I'm getting a reading here.
Coming out of hyperspace.
Looks like there's a strange moon up ahead.
That's no moon. That's the EDGEFINDER.
Thanks again for flying with us on the A1 Trader. Our goal at A1 Trading is to give you the latest in market news through our daily videos and articles. Take advantage of our huge Black Friday sale, 45% off, happening all month on our best products we have to offer. A1 Trader, prepare for the return home.